The story of Elixirr is actually quite an interesting story because I had a bit of a tour of duty between three major brands in the consulting industry, being KPMG, IBM, and Accenture. And all of them had different strengths, and I saw different weaknesses in them. And I thought that the weaknesses started to get to me over time, and I thought that I wanted to build a firm that kind of eradicated many of those weaknesses, which I'll go into in a second. But essentially, Graham and I sat around my garden table with no brand, no capital, and having experienced my three experiences and Graham having experienced Accenture, I think we wanted to find a balance in a firm that had an ownership mindset, where we had lots of accountability, where if you performed, you did well, and if you played politics, you didn't. So we wanted a place where people chose to work because they were high performance individuals who liked to be part of a high performance culture and wanted to be the very best they could be at the job they did day to day. How did we do that? What defines success in doing that sort of thing? It's obviously the best client impact possible. So, Elixirr was, that was really the genesis of it, is that we're looking to say, the politics of the big firms, the, P&L accountability, that's all over the show, the orientation around their own capabilities or products. We wanted to eradicate all of that and say the first thing that matters is our client, and how do we best perform to deliver to that client is let's build an ownership culture and an accountability to the P&L of each partner, and let's get great people who love to be with other great people, and let's leverage that high talent base that exists in an ownership setting. I feel that the big firms are very fortunate in some setting because they obviously have a brand, and no one ever got fired for hiring one of those big brands. But what unfortunately that leads to is some form of average bar setting. There isn't an expectation that they have to be the very best every time, because it's just a question of turning up. I know that's putting it a bit extreme, but you've got to say it in the extreme to make the point. They're obviously very good in so many areas, and I don't wish to criticize those big brands, but there is when clients are doing very, very difficult things, they want someone turning up with a very high ownership mentality, with a very high quality mentality. And there's a little bit of an order taker mindset in the big firms because the brand brings in business, whereas my partners have to go out and find a business and have to convince their clients every day that they can add some real value to the business. And so we're a true challenger in that sense, and that's the opportunity for us to build. There isn't really I always say that it would be almost impossible for a firm like McKinsey to become a public company. There'd be too many stakeholders in the conversation to be able to get alignment for that to happen. So actually a true challenger that uses ownership as a key element of the reward model and motivation model for its people can only really be built from the bottom up. And that's why we're fairly unique in that sense. And that's the genuine opportunity I see. So to show up like owners is not just a word. It's not just a sentence. It's a way of being. And you have to build that from the ground up as a culture. And I think that will scale too as we get bigger and bigger.
One of the interesting things for me has been questions from a lot of investors actually saying how easy it is for other companies to just start and take our market share. I can't tell you how untrue that is. Scaling from a startup to a global firm, knocking on the door of FTSE 250 doesn't happen overnight. In fact, it's taken 16 years. And that is by, building trust-based relationships with people, convincing them to come join your journey and your vision, by recruiting the best people in the market, working with world-class clients, household names. These things don't just happen. And it's taken a lot of hard work. And that's because we've focused on board level issues from day one. We've always wanted to be at the top table and talking about the big issues of the day with our clients. Bridging that gap between strategy and execution, but not just focusing on one or the other, not being a PowerPoint factory and not just, being told what to do and blindly doing it. We want to actually create the value in between, where we can link the advice into the tech, into the data, into the artificial intelligence, and then make it into execution and successful and being accountable for those results. We've deliberately built up our capability set in that way. All these founders who lead these acquisitions now join us on our mission and our vision to become the best consultancy in the world. Not the biggest, but the best. And by whatever measure our clients look at us, whether it's through quality of the senior people, the junior people, accountability, speed, flexibility, we want to be the best in all of those different aspects. And that is the journey that we're on.
The culture is such an important part of cornerstone to our business strategy. Many people say this. It's a frequently used phrase. Culture eats strategy for breakfast, and I think that we've created this entrepreneurial culture that's super important. So I'd like investors to think about it like this. Many investor funds will ask their investment decision makers to take a carry in an investment that they make. And there's a reason for that, and investors will understand it, because it means that the person making the decision about what to invest in has a personal stake in that decision, and it's not just a decision that's not without its consequences, let's say. And the same thing applies to all my partners and employees, is that we're all owners in the same way. So those consequences, if we fail, those consequences hit us as well. But equally, if we succeed, they hit us too. So we want to pick those business relationships that make the biggest impact to us, and we want to make the biggest impact to those business relationships as a result. So this is what differentiates our firm, is that we're actually the first consulting firm that has investment carry in our own trade, right? Which is the relationship with our clients. And I think this is a very interesting way for investors to think about this. The other thing that's very obvious when you come and spend time with an Elixirr team is the nature of the teamwork. There's not a dog-eat-dog environment. There's very much an environment of high performance, people celebrating high performance of their peers, but not in a competitive way, in a genuinely, the business succeeds if we do have high performance, and individuals are rewarded for that. So everyone is striving to be the best version of themselves in the context of, like you would do in any professional or high performance sports team. People get put on the bench, people get dropped. This is what happens, and it happens in our business too. And we're very honest about that. When people need to improve, we tell them very, very straight. And high performance people like this, because they know the environment's honest, they know that there's going to be accountability to their performance, and they're very comfortable with that. Then the other thing I'd just like to finish off by saying is that, Elixirr is not a firm that waits for the perfect conditions. We know that the market has its ups and downs, and it has its cycles. We actually founded the business, Graham and I, in 2009 in the financial crisis. And many people were saying at the time, what a crazy time to start a business. Why would you be doing it now? And in some respects, it's the perfect time. And this is what we do in our business. We don't wait for those perfect conditions. We take the conditions as they stand, and we plan to the upside, because from a downside, there's going to be upside. So that's very exciting for us, and it's in our cultural DNA to do that.
There are many examples of consultancies around the world who have failed because they've only focused deep into one industry, or perhaps had tunnel vision into one geography. But when the markets turn and go down, they have all their eggs in one basket, and it may be that the whole industry starts pulling discretionary spend, and they haven't put themselves into the non-discretionary bracket, which means that ultimately the revenue disappears. What we've done very particularly over the last 16 years, but also particularly since IPO, is to diversify what we do, the industries we do it in, and the geographies we do it in. So if I think at IPO, we were 97% consulting revenue. Now, that's probably less than 50% when you add in data and tech. When you look at the industries we were in at IPO, 80% FS and insurance was where we were. Now that's half that, it's about 40%. Doesn't mean that actual number's gone down. I think it's even more than doubled, but the percentage and the reliance on it has gone down. And from a geography point of view, we were 10 or 20% US revenue at IPO, but now we're 50, 60% and looking to increase.
As investors will know, we made a big thing of ownership and consulting carry, if you like, in the same way that investors would take carry in one of their investments to build accountability and responsibility to the decision. We do the same thing, and we do it in multiple ways, and it's perhaps worth just elaborating on that so that people can see how we pull the strand, or how we use this lever to get the best out of the performance from our partners in the first instance, and then our employees in the second instance. We like our partners to join with a 5-year window at least, so all equity vests over 5 years. And that 5-year window is important because we don't see the business intraday. When the share price goes up and down, clearly people are watching it, but it's not the thing that drives us every day. We know that if we turn up and we do great work for our clients, and we see our other partners and colleagues performing great work for our clients, and we grow our business as we have done, 25 to 30% a year, with the EBITDA margin staying the same, in the long term, this business's value is going to go up in that ratio, assuming price earnings stays the same over time. But we don't worry about it intraday or inter-week or inter-month. We think about it as a 5-year block. And if you look at, it's almost 5 years since our IPO, and you can see that at IPO to now, that investment return, anyone would take that return. Okay, there's been volatility in between, but we don't think of it like that, because we know we're building every day something of value, and we can see it in front of us every single day. To give investors a sense of what is at stake for my partners, if you like. If you go to a Big Four and MBB, you could probably earn, say, £5 million over 5 years as a reasonably successful partner in those businesses. If you were a partner in my firm, the cash equivalent of what you take out of Elixirr is somewhere around 2 million in that same period. So it's less than half, right? So what's in it for my partners? They get equity participation that can deliver them 10 to 12 to 13 million over the same period, assuming the company grows at the rates we have done since IPO. So the great thing is I have many partners who've been here since IPO, or new partners very early on after IPO, who've seen this growth happen, and there's different people, different stages of that journey. So there's a great proof point through the business of how successful you can be at this strategy. And that's with our equity price not being fairly valued in our view. So, we think that there's a fantastic opportunity here, and partners are in it for the long term. They act like it's their business, and candidly, this applies to our employees too. We give our employees the same opportunity through our employee share purchase scheme. They can buy shares in the company, and we will match that for them at the end of the year. And again, same long-term opportunity, 5 years investment horizon, so invests over 5 years. So this is a real strength of our bow, and it's a real cornerstone of our culture, and we treasure it and nurture it because it's super important to us.